If you're feeling uneasy about your bags because of the rising tensions between Iran and Israel, you're definitely not alone. The situation looks serious, and any direct involvement from the US could easily take things to another level. But does that mean it's time to panic and make rushed decisions out of fear? Not necessarily. In this video, we'll dig into what's happening beneath the surface and break down how Bitcoin and the broader crypto market have reacted during previous global conflicts. We'll also go over some key indicators that can help guide your next move. If that sounds good, hit like to support the channel and make sure you're subscribed if you haven't already. Let's get right into it. On June 13, Israel carried out strikes on dozens of targets inside Iran, marking what is being called the most extensive attack on Iranian territory since the Iran-Iraq War in the 1980s. The two nations, long-standing rivals in the Middle East, have continued to exchange strategic missile strikes in the days that followed, keeping geopolitical tensions at elevated levels. While many have expressed concern about broader escalation and the possibility of the United States becoming directly involved, financial markets have so far responded with surprising calm. Bitcoin has followed a similar pattern. Although there was a quick dip immediately after the initial bombing reports, the price has mostly recovered. It fell from around 108K to just around 105K at the time of recording. This is a drop of less than 3%, which is fairly routine in crypto markets and hardly a signal of widespread panic. However, it would be premature to assume that the risks have passed. If the situation were to escalate further, and especially if the United States were to step in directly, the impact on global markets could be severe. In that case, Bitcoin and even more so the altcoins would likely take a significant hit. Still, if history is any guide, markets often move through a familiar pattern where initial fear and volatility eventually fade as conditions stabilize, leading to rapid recoveries in both equities and crypto. We've seen this dynamic before. On 1st of April 2024, Israel targeted an Iranian embassy complex in Damascus, which killed several senior officials. Iran responded by seizing the Israeli ship MSC series and launching missile attacks on April 13. Bitcoin briefly dropped more than 8% following the retaliation, but quickly stabilized as markets adjusted to the new situation. A similar pattern played out after the events of 7th October 2023, when Hamas launched an attack inside Israel, killing over 1,000 people and triggering an ongoing humanitarian crisis. Despite the severity of the conflict, Bitcoin remained relatively stable and was trading well above pre-attack levels just 50 days later. Looking further back, in early 2022, Russia's full-scale invasion of Ukraine had a more immediate and noticeable impact on global financial markets, particularly in Europe. But Bitcoin's response was surprising. Within just 5 days of the invasion, Bitcoin had rallied over 16%. These examples suggest that Bitcoin has often shown resilience during times of geopolitical turmoil. However, if tensions continue to rise and the Strait of Hormuz becomes a flashpoint, for instance, oil prices could surge, triggering wider economic disruption. And if US forces are pulled into the conflict directly, it could create a wave of fear across global markets. In such a scenario, risk assets across the board would likely see severe downside, with altcoins getting hit the hardest. That's why even though Bitcoin has held up reasonably well so far, it is important to stay alert, stay informed, and approach the market with a flexible mindset. Now let's take a step back. While everyone's stressing over daily 2 to 3% moves and reacting impulsively, I'd rather zoom out and focus on what really matters. That is the macro structure. This chart shows something most people are sleeping on. Bitcoin is approaching a long-term trend line that's been respected for nearly 8 years. This red diagonal isn't just any resistance. It marked the top back in November 2021, the same zone where euphoria peaked and the market reversed. And now, after 2 years of grind, retrace, and rebuild, Bitcoin is once again knocking on that same door. Currently sitting just under 112K, this level is the final ceiling before what I believe will be the next parabolic phase. Yes, there's chaos out there. War headlines are flying around daily and sentiment is shaky. But even with all that noise, Bitcoin is still range-bound and coiling just beneath this multi-year resistance. That shows strength. What I'm personally expecting and hoping is de-escalation over the coming weeks. If tensions ease, that relief will act as rocket fuel. We could see a monster pump not just on Bitcoin but across the altcoin space too. This isn't the time to get caught up in the chop. It's the time to watch for the real move. And for me, that move begins with a clean break above the 112K trendline. Once that happens, the chart enters open sky, and historically, that's where Bitcoin doesn't just climb, it rips. That breakout will likely trigger a major rotation into altcoins, and that's where the real fireworks begin. Until then, patience. This is still a range, still consolidation, but the structure is tightening, and when it finally resolves, the breakout will be spectacular. One of the lesser-known but incredibly reliable indicators I'm tracking right now is the copper-to-gold ratio. Most people have never heard of it, yet it's been one of the most consistent ways to gauge where we are in the business cycle. And for risk assets like stocks and crypto, this ratio can be a game changer. It works as a confidence barometer. When the ratio is rising, it means copper is outperforming gold. That typically signals optimism and growing belief in economic expansion. On the other hand, when the ratio drops and gold begins to dominate, it suggests fear is building and investors are shifting toward safety. Right now, this ratio has just hit a multi-year bottom and is starting to turn upward. That shift may seem subtle at first glance, but historically this kind of move has marked the early stages of major Bitcoin rallies. We've seen it multiple times. In 2016, copper began recovering from a long bear market. As the copper-gold ratio climbed, Bitcoin followed the trend, rising from around $400 to more than $1,000 and eventually exploding into the 2017 peak at $20,000. A similar pattern played out in 2020. As global economies reopened after the lockdowns, copper surged. Bitcoin responded by rallying from $5,000 to nearly $69,000. This correlation isn't about perfect timing, but about directional bias. When the copper-gold ratio rises, it reflects an environment where risk-taking is rewarded. Bitcoin, as a speculative asset, tends to perform well in those conditions, but the reverse is also true. In 2018 and again in 2022, when the ratio rolled over, Bitcoin experienced sharp declines. These drawdowns weren't isolated events, they aligned with broader fears of slowing growth and tightening financial conditions. As of early 2025, after a long, grinding decline through 2023 and 2024, the ratio has dropped to levels not seen since the COVID crash. That kind of extreme pessimism usually shows up near macro bottoms, and we're finally beginning to see the first signs of stabilization. The market may be shifting gears again. In the immediate term, gold could still outperform, especially if war headlines dominate. But the moment we get any real signal of geopolitical de-escalation, I expect this ratio to spike sharply. And when that happens, Bitcoin usually doesn't just move up slowly. It moves with speed and momentum. We're one headline away from either a sharp dump or a massive pump, but this is exactly when staying calm matters most. Panic selling at these levels rarely ends well. I'm keeping an eye on key indicators and looking at the market through a broader macro lens. A few weeks from now, we might be looking back at this moment wishing we had taken action, especially on some of these undervalued altcoins. That said, I'm not going all in. I'm scaling in slowly, staying cautious and placing small bids where the risk-reward makes sense. Right now, it's all about waiting, observing, and letting the bigger picture play out. If you want to follow these trades and stay in the loop in real time, join our community and stay connected with everything as it unfolds. I will leave links in the description. Thank you for watching, and I'll see you in the next one.